start recording. Yes. Okay, we can see and hear, we can see and hear, we can see and hear. Yes, 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 that's the way it's meant to be. That's the way it's meant to be, so that people won't slip off while they are waiting. Now, we're going to be looking at why. Why? They always say smart money. Let me take it to my trading view because this thing is confusing my eyes. Okay. They always say smart money concept is the best strategy. It is the strategy that deals with the big boys. It's the strategy that allows you to know when the big banks wants to move. It's the strategy that allows you to chill with the big men, allows you to move in the direction of the big men. But why is it that despite all this effectiveness, despite all the way the strategy is sharp, why is it that a lot of smart money traders still lose money? And why is it not that we've heard the news that, hey, the smart money traders are still the best traders on earth? Why is it like that? Well, left to me, I've not really seen smart money traders that are like the at the top of the luxurious life, on like the likes of Q banks, Raja banks, and so on and so forth. But these guys are not smart money traders. So I'm not into that right now. But I want to let's look at why. First of all, why is it that okay, this set of people are still losing money despite the strategy is effective? So first of all, I would implore all of you that you should know how to first check the structure. Like I always say, when you want to start trading smart money, check the structure of the markets, and then you want to enter at a demand level or a supply level, and at an order block that has been refined so well towards to be expecting mitigation, and then you look for your entries from there with the order block entries that I have explained. Now, the first thing I have here is too much information. Yes, too much information can be very, very disadvantageous because first of all, you are coming from a particular strategy, which is the retail strategy. Now, the information you have on the retail strategy is quite different. In fact, it's not quite, it's very different from the information you have on the smart money concepts knowledge. So, those sort of things, it tends to affect your trading psychology because there's too much of information, and then you don't know which one to follow, you don't know which one to obey. Like some people still always ask that should they use head and shoulders pattern? For me, if you are trading smart money concepts, which is SMC, liquidity or whatever, you should not be try to be looking for any retail pattern again. You shouldn't be looking for anything retail in the market again. The likes of M&W pattern, the head and shoulders pattern, the cup and undo pattern. There's anything like that. The Elliott wave. Elliott wave too is more like smart money concept, but still kind of retail also. So you shouldn't be looking at those information. You should do away with those information. Go straight to smart money concepts. Know the terms, which are what I explained on the first day of this class. The liquidity, the order block, mitigation, and imbalance. Okay, those set of information is very, very enough for you. Some people, again, when they start trading smart money concept, they believe that type of information is very, very small, which is just the demand and supply, order block, mitigation, and then inducements. And then okay, and then imbalance. But the fact is, this forex market, some people want to believe that, hey, I need all the information, I need everything, I need to know all the terms, I need to know all the name of the candles, I need to know everything, I need to know a lot of things. Whereas all you need is just little information because you don't want to make things complex for yourself. Simplicity is the key. Makes things simple. Some people, they want to learn smart money and then they just want to make sure that they pay for $1,000 to get that course, and then when they pay for that $1,000, they're like, yes, this is the type of knowledge I'm looking for. Whereas you don't need to make things complicated for yourself and just make everything simple, because most people, they go extra miles to look for those people that will make things very, very hard, and then they mess things up for themselves. Make things simple. Just keep everything simple. Simplicity is the key. Even Wyckoff, when I noticed that this Wyckoff was getting a little bit, because most people don't understand Wyckoff, and then I made video for my students in the mentorship that, hey, It's not by force you know the O, automatic rally, buying climax, retests, what again? Selling trust, up trust, distribution, all those stuff. It's not by force you know all those type of things. I made a simplified WYCKOFF video for them so that they don't have to cram or master everything before they can say, hey, this is WYCKOFF. You understand? It's not by force to make everything complex or hard for yourself. Because I know some people are trying to cram WYCKOFF that, hey, this is AR, ST, UT, BC, this. You don't actually need all those information before you can say, hey, this is WYCKOFF. For example, I took a WYCKOFF trade here today. It was a backtest trade. As you can see, I didn't send the signals to the group. So anything I'm doing on backtest mode, I don't send the signals. I just sit down and watch. Sit down and watch and see what's going to happen, because I was trading WYCKOFF here, and as you can see, I didn't label my screen. It was a 1.1 pip stop loss trade. I didn't label the screen at all. I didn't label the screen at all. You can see, and it was a WYCKOFF. I just located what I was expecting, and I was expecting what the liquidity graph. That's all. I don't need the automatic rally, BC, UT, all those stuff. No. I don't want to make things complex for myself. I just spot what I'm looking for, and then once the market has done that, I look for my entry. That's how to make things simple for yourself. But some people, they'll say, this guy is using indicator, is using RSI, is using this, is using that, is using this, is using that. You know, those kind of things always make things hard for you when you are trading smart money concepts. And in trading, even in Forex generally, either a smart money trader or retail trader, you don't need too much of noise. You don't need too much of noise. You don't need too much of trend line. You don't need too much of indicator. Just keep it simple. Make it simple. That's it. Just make it simple. Keep it simple. That's all. Have you seen any jargons on my chart lately? All you can see just rectangle, risk to reward, rectangle, risk to reward, rectangle, 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 risk to reward. That's all. I don't need indicator. I don't need trend line. I don't need anything, because everything I need to be seeing is what's displayed on the chart right there. And when some smart money traders have started using all these other, some people say order flow indicator, some people use economic data, some people go to Chrome. I don't even know where they always get that sort of data. I've forgotten it now. I've actually forgotten. They call it I've forgotten. All those things, you don't actually need them to start trading smart money concepts. Either as a beginner or as a professional, you don't need all those extra stuff that you always see on YouTube. I've forgotten what they call it. Data something something. I've forgotten because I don't even use it. So that's the most reason why most people fail using smart money concepts. They want to know about inducement, they want to know about inefficiency, they want to know about things that they don't even actually need. For me, I've not even thought of I want to use inducements. I don't need it, because let's say you want to still trade inducements. This is an inducement here. Inducement is like fake move before the touch on the order block. Now let's say this is an inducement. I know that this is an inducement, and inducement is fake move before the sell. So after inducements, there should be what's touch on the other block. Even if there was no inducements here, I'll still be waiting for what? I'll still be waiting for my other block to be touched. Either there's an inducement or not. So I see inducement as unnecessary when I'm making my analysis. Like, I don't need it, because either it is there or it is not there. I know that my entry would be on the other block. So I don't need anything like inducements, FVG. I really don't like complicating things for myself. Just make it simple. That's all. I think I've talked so much about too much information. Then the second one I have here is SL is wide is smaller than TP. Yes, try to think about it. Trading smart money concepts, your SL is going to be sorry. Yeah. Yes, trading smart money concept, you should understand that your SL is going to be smaller than TP, meaning your stop loss is going to be smaller than your take profits. And then what does this mean? It means if you are not so precise at your entry, you are going to get stopped out every time. Keep getting stopped out. Why? Because your stop loss is very, very small, and there is high probability for markets to move. Let's say we have this tool here. Let's say we have this tool, and let's say we have this red tool now. this tool here, this one I'm looking at. Hey, I open our app now. Now let's say we have this and market is trying to move. There's high probability that markets would touch this zone before what touching this zone, because it is a very, very small zone compared to the take profit zone. I believe I'm communicating. So this really is, it always affects traders because their stop loss is small. That's just the meaning. And if you are not so precise or not so precise about what you are doing, you are going to keep getting stopped out because your stop loss is very, very small and close to the current market price, unlike coming down to its profits. You understand? That's why. That's one reason why people get stopped out ASAP. Like me now, when I found out my WYCKOFF, I used another entry that we use in the mentorship group, which is the confirmation special entry, which I used here to get this entry here. Okay, where's the 2 now? Sorry, Z. And that was the entry here. And I was looking at it. I didn't even enter this trade at all because I was planning that I would trade on Friday. Today's Friday, so I was planning I won't trade today. Where is it? Admits. This person is trying to admit. So just ignore that. So I was just watching while it was playing out, and I can see the stop loss was just 1 pip stop loss. Now, out of 1 pip and then 32 pips, which one would easily get it first? It's definitely the 1 pips. If you don't know what you are doing, your stop loss will get it. And you also need to consider the fact that spread is something that is disadvantageous to smart money traders. When you are trading smart money, you should be using a pro account or zero spread account. Now, using 1 pip stop loss and you get little retracements, you are out already, because even if the market does not hit the stop loss, your spread will have touched the stop loss, and in the blink of an eye, you are gone. So these things you have to take notes, because the stop loss is very, very small, and then the spread and market price is nearer to the stop loss than to the take profits. So stop loss are going to always get it faster than take profits. So it's always advisable as a newbie. There's nothing bad in using 5 pips stop loss, 6 pips stop loss, up to even 10 pips stop loss. Because think about it, if you were trading retail trading before and you were using up to 20 pips stop loss, so why should you come to Smart Money Concepts and start using, because Instagram traders or somebody like me is using 1 pip stop loss, and then you want to just start copying immediately? You know, the levels cannot be the same thing. So just try to be realistic with yourself for the meantime while you are still learning and getting acquainted to the strategy. Use the normal lot size, or sorry, stop loss you should use, and you are good. But some people, because they've seen, hey, somebody's using 1 pip stop loss, somebody's using small pip stop loss, and then whenever you want to enter a trade, you are just forcing the stop loss. You are not actually using the stop loss you are meant to use. You are just forcing the stop loss. At that point, even if you don't know what you are doing, you get stopped out immediately. Now, the next thing I have here is too many pairs. Yes, as smart money traders, something that affects us is too many pairs. You can say I have just 3 pairs here. I don't want to stress myself at all, because let's say the smart money concept is 80% accurate and you are trading 10 pairs. It means out of 10 trades, you get 8 trades win and then 2 trades loss. Now, if your first 2 trades is a loss or are losses, what's going to happen to your next trade? What's going to happen? What is going to happen is you get emotional that, hey, I've had 2 losses on a row. And once you even see another setup on another pair, you might not want to get in the exact way you are supposed to get in. Your emotion is playing. You are thinking about many things. Hey, if I get in, if I do this, I may hit stop loss again, I may, and then at that point, is either you take that trade in fear, doing the wrong thing, or you don't take the trade at all, missing the trade, and then it might eventually play out because it is a 80% strategy. And then once it plays out, what's going to happen? You are like, oh my god, I missed the setup again, due to the fact that you've missed 2 stop losses. You've had 2 stop losses on a row. Now, think about this. That's because you are using 10 pairs. Some people trade 15 pairs, 20 pairs. I don't even care. Now, imagine you are just trading 2 pairs and the strategy is 80% accurate. Now, on those 2 pairs, it means there's high probability for you to win whichever 2 trades you are going to take because the strategy is 80-20. Unlike when you are trading 10 pairs, whereas the strategy is 80-20, meaning it's possible you have 2 losses on a row. You understand? And then when you are not careful again, you continue getting the losses because your psychology comes in, your emotion comes in, and then you don't even know what you are doing at the moment. So it's very, very advisable to use smaller pairs because the effectiveness of the strategy is very, very high. And then when you are using small pairs, you don't distribute all your trades to one pair, 2 pair, no, sorry, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trades. No, because you are trading 10 pairs. You just focus your trades on how many pairs, 1 pair or 2 pairs. In fact, some people just trade just 1 pair, maybe Euro USD. Most smart money traders I know, they trade only Euro USD or just USD JPY or AUD USD. Why? Because they have small spread, you get. So when you're trading smart money, you should understand that you don't need 10, 15 pairs to analyze because it is a bank strategy, and then because it's so effective that, hey, I'm gonna, just trust me. When the losses come, you get emotional immediately. There's no way you want to do it. There's no way. Once you get 2 losses on a row, you get emotional immediately. But if you are just trading 1 pair and in fact, if you just have 1 loss on a row, you know that before you even see another setup, it will take a long time. And then you enter the trade again. Even if you have a loss again, you know that before you enter any trade again, before you see a setup, it will take a very long time. Why? Because you are trading just 1 pair. Unlike when you're trading other pairs that you're always seeing setup. As you're seeing setup on Euro USD, you're seeing on GBP JPY, GBP USD, GBP Kinikon, GBP NZD, and then you're just taking all the trades. You're taking all the trades. You're taking all the trades. You're taking all the trades. Sometimes you might win all. Sometimes, yeah, it's good that sometimes you might win all, which is very, very reasonable, and which is very, very possible. But in times of losses, how will you be able to handle yourself? That is my question. In times of losses, how will you be able to handle your psychology? How will you be able to handle yourself when the losses come? When you are taking a lot of trades on a lot of pairs, and then you are just in red, 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 red. You are going to forget that you've had profits yesterday. I don't want to know how you are going to do it. You are going to forget immediately that, hey, I had profit yesterday, I have lost today. Let me just close for the day. It's a lie. You'll be like, hey, this loss. You'll be like, how do I make it back? 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 That's what you keep thinking, and then you keep entering more trades, and then you are out of the game. And you are a bank trader, imagine. So all these things requires discipline a lot. It requires discipline. Just discipline yourself. Try to trade little pairs. For those that always see me that trade crypto, I have just 4 pairs here already and 3 pairs here. And volatility index also, I just use 3 to 4 pairs. That's all. Don't stress yourself at all using different pairs. No, just because it's a bank strategy. Because it's a bank strategy does not mean you should misuse the effectiveness of the strategy. Never forget that whenever you're also trading, you won't always get all the pullbacks. Back to your point of interest, you might not always also get the correct setups. It requires time. How patient are you in what's waiting? How patient are you in taking trades? Like, okay, I'm waiting for this setup to come, not rushing into the setup. I'm waiting. You don't always get all the setups, you don't always get all the pullbacks every time, and you don't always get re-entries every time. You don't always get the entries every time. It's not every time you markets will mitigate and then you get the entry. No, it's not every time. So try to learn that and try to be patient whenever you are using this strategy. Try to be patient. It's not every time you get the setup, it's not every time you get the pullbacks, it's not every time you get the re-entry. This is very, very important. And which other thing do I have here? I have 2 more I like to go, which is no trading plan and then Instagram and YouTube mentors. Yes. So no trading plan is divided into how to make trading plan. So I'll be talking about make trading plan 2 also. Now, first of all, let me talk about the Instagram and YouTube mentors. Instagram and YouTube has really done a lot of harm in this forex world. It has really done a lot of harm. And what most people don't know is those people you see online flipping, it's not as if that's their first time trading. They've been used to this thing for a very long time. And it is not also as if they are using their last capital or their hard-earned capital to trade. Most of these guys, they always use their profits to trade. They are using their profits to trade. But you, when you are seeing them, you're like, hey, I want to be like this guy. I want to go and start flipping. And then in the process of flipping, you get flipped. And at the end of the day, you are looking, hey, what do I do? What do I do? How do I do this? That is why I always advise people, before you go into FTMO, before you go into my Forex fund, before you go into E8, before you go into those funding talents or whatever stuffs, I don't even like those stuff, but before you go into those stuffs, be sure of yourself, be sure of what you can do. What is your trading plan? Now I've moved to trading plan. What is your trading plan? How many trades have you taken on this strategy? At least you should have taken more than 200 trades on other blocks, smart money, repeating the same thing over and over again, repeating the same thing over and over again, over and over again, over and over again, understanding the concepts, understanding the why and how of every movement, understanding everything about the pairs. But if you are trading up to 10 pairs, how will you even understand the movements of USDJPY? Like me now, I've been following this USDJPY for a very long time, so I've known most of the structure, how the structure always plays out, and its reaction when it gets to point of interest. Same thing for USD, same thing for GBP, JPY. So there's no, this was yesterday's when I was talking about, and this one here, I don't really expect this. I wasn't really on chat today. This is GJ also. This was the point of interest I drew out yesterday, almost tapped into it. That's why I said you won't always get those re-entries. You won't always get all those re-entries. Okay. What is your trading plan? Have you taken 300 trades? Have you known how you can adjust yourself? Have you modified the strategy by yourself? Have you done research that, hey, this is how this thing works when it gets to this, this is how this does when it gets to this? All you just want is, I want to fund, I want to fund, I want to fund. You get funded and then you rush in, you rush out, just like that. How do you create a trading plan? Okay, this is how you should create a trading plan. First of all, what is the strategy you are using? You are using smart money concepts. Good. What's your type of trader? Are you a swing trader, a day trader, or a scalper? Know the type of trader you are. Then your analysis. If you are a swinger, you should know that you are starting from you should be analyzing more on weekly, daily, and 4 hours. Day trader, you should be analyzing daily, 4 and 1. And then scalper, you should be using 1, 30, and 15, and then other entries forwards, other time frame forwards for the entry. You should know that already. That's for creating a trading plan. You should know time frame for your analysis. You should know the strategy you are using, and the entry is the most important. Okay, what do I need to see before I enter? Is it WYCKOFF? Is it other block? Is it whichever entry you're going to be using? Because we have 5 entries. We're always using the mentorship, and I always advise stick to 1 or 2. That's why we have 5, so you can just select the one you love most, so you don't always miss the movement of the market. Just select 1 or 2, find out you can join it together, use it in a fractalized market, join go down to lower time frame, see how you can combine it, do a lot of things with the entries, come up with 1 that you can use or 2 that you love. That is what you need to see before you enter the market. Is it the double demand and supply entry? Is it the market maker candle entry? Is it the WYCKOFF? Is it the confirmation special entry? Is it the normal order block entry? For me, I use the market maker candle entry, and yeah, that's all. That's the only entry I use. So even when I saw this WYCKOFF here today, I still use the market maker candle entry for my entry, even after looking at the WYCKOFF. Why? Because my trading plan is my entry should be market maker candle entry. So whichever entry you are going to be using, okay, I want to enter because I am seeing this, not because you are entering. due to the fact that somebody is using this type of entry, or that person is
Which
trying
one
to
is
support
market
profit.
meter handle?
Yeah, I just said is a candle method of entry I use for my mentorship. So it's not something that is free. Please, if you have any question,
Okay.
just mute yourself and mute yourself and type it. The market meter candle entry is not a free entry here. It's part of my mentorship pack. You understand? So it's not something I can
Okay.
really
Okay.
explain right
No
now.
problem.
But I'm just using it as an example that if you've learned a type of entry on YouTube or somewhere and you want to enter, part of your trading plan should be okay. Why do I want to enter? I'm entering because I'm seeing this. I'm entering because I'm seeing that. Not because the market is mitigating and you just enter a sell. No, you should be entering for a reason, and that should be part of your trading plan. That those are some ways to create a trading plan. And then after creating the trading plan, then write everything down, the entry, and then when do you exit? You should exit at areas of liquidity, something like this here. So that should be the exit, nothing so hard. And then when the market is in profits, 10 pips profits, 15 pips profits, you want to what? You want to break even immediately, because once market leaves another block entry or area, it should not go back there again. So you want to lock profits immediately, and then you are waiting for runners to run. Or if you are a type of trader that use big lot size, you should what? Start closing, and then leave runners to run to areas of liquidity. That is how to make runners run and maximize profits on a particular trade, because the runners that will run might even be more than that might give you profits more than the one that you've closed. You get what I'm trying to say now. So that is that about the trading plan. After you've created your trading plan, now using that same trading plan over and over again, take more than 100 trades. Don't let me say 500 trades now, because I know some people say 500 trades, and there are some people that they didn't take up to 500 trades and they are consistent. Then that's very, very fine. But for me, I would advise more than 100 trades, but sincerely should be 500 trades actually, so that you would have been used to this thing, and then you'd have mastered everything you need to master before going live at all. And then when you take account from FTMO, FTM, abi FFF, whatever name they call them, you should grow gradually. Not that I want to get funded, and when you get funded, you are out just like that, so cheaply, and you didn't even enjoy the time frame the market makers gave you, sorry, the funded people gave you, just like that, and then you're out of the trading of their trading system. So you have to be very, very patient in waiting for setups, waiting for your trading plan. Obeying your trading plan is one of the hardest things in these markets, because sometimes when a trade plays out, sometimes I always miss entry, because the entry that the market is giving me is not the entry in my trading plan. So I just have to let it go, just like that. I just have to let it go. But this one, I didn't plan to trade anything today, so I just left it. It met all my criteria. I used WYCKOFF and then my normal entry, market maker candle entry, which I used, and it really, really delivered well. And I was just watching it, watching it. I have added it to the journal. You have to be journaling your trades. You should know why and why you made profit, and why you made loss. If you make profit, write it down. Write it that I made profits because I did this. If you have loss, write it down. I made loss because I did this. This strategy is more effective than you see people online bashing smart money traders. Hey, they are smart money traders, but yet they still get liquidated. They are smart. That's because even the smart money traders are not actually trading the smart way. They are not actually trading the smart way. They are just trading still like retail traders using smart money strategy. You are still having the psychology of retail traders, but you are using smart money strategy. So you are not different from the retail traders, because you are still thinking the way they think, just that the strategy is different, and then your chart setup might be different. That's all. As a smart money trader, you have to be smart in your ways. Like the name says, smart money trader. So anything you are doing, you have to be smart with it. Track trades, know why you are having loss, know why you are having profits, know why a lot of things are happening on your trades. Not just entering because somebody's using 1 pip stop loss, me too, I want to use 1 pip stop loss. If you are seeing 10 pip stop loss setup and then it is according to your trading plan, go with it. If your trading plan says if the stop loss is more than 5 pips, I'm not taking the trade. If you see setup of 10 pips, don't take the trade. As simple as that. That's why I said following your trading plan is one of the hardest. Following your trading plan is one of the hardest because you might say your trading plan should be, I want to use WYCKOFF entry. For the whole of 1 week, you might not see WYCKOFF entry. That's why I said you should have to take trades 500 up to 500 times, so you know the type of setups, the type of entries that frequently happen, so you won't really miss entries. I believe I'm communicating, guys. I think I'll stop there. If anybody asks question, let the person drop the question. Please just ask the question using your question, the comment box. I want to quickly go through and a topic that is not necessary, which is also adding to what, to your your lot of information, because they said a lot of information in this market is not necessary. It's not necessary at all. It's not necessary. Now I want to add to one. I want to give you one knowledge that is not necessary that people always ask, which is how to identify hidden order blocks. In fact, you can't even identify the visible order blocks yet, but you still want to identify the hidden order blocks. Why? Other blocks that are visible here, you can't even identify them. Now you want to start looking for the hidden order blocks. So that's why I said it's not necessary, because if you are wasting all your time to look for hidden order blocks, so what will you do with these visible order blocks here? Have you seen that information is not necessary? It's not necessary at all. But let me show you how to identify hidden order blocks. This is the candle here. Let me check. I think someone has something to say. In fact, this is what I was talking about here right now. So hidden order block. Don't let any Instagram trader or YouTube trader confuse you and say, let me show you how something is hidden somewhere. Don't allow anybody to confuse you, to trick you, because I noticed that these days, in fact, people mislead others with a lot of fake results. So we are not students who listen. Students who listen, they know themselves. My students who listen know themselves. Students who listen know themselves. I don't know if you are students who listen, but for me, I know my students who listen. So, what chart do you use for day trading? Yeah, you use daily, as the name says, daily, then 4 hours, 1 hour. Hidden OB, I'll talk about it in a moment. How do you do your top-down analysis? Top-down analysis, I just run from. Okay. I have a problem when it comes to OB. So what is the problem? Is it like you can't identify the other blocks, or you are also struggling to look for hidden other blocks? What are the criteria used for entry? Which is I have 5 criteria for entry, which is what I just explained right now. Me and my students use in the mentorship. But the most common is WYCKOFF and then the other block entry. And I also have ebooks on entries. I think it's still WYCKOFF and other block. Then using liquidity for entry also is also a criteria for other block entries. So those are the criteria for entries. It might be the other block entry, that's what you are looking for, or WYCKOFF. I want to see WYCKOFF before I enter. That's the criteria. So how do I do top-down analysis, and how do I do top-down analysis? Okay, so first of all, top-down analysis, daily time frame. I check the structure on daily time frame. Let's go to a different pair. Which pair do I hate most? I hate GBP NZD. So let's do a top-down on that. I always start from daily time frame. As you can see, the daily time frame is very, very bullish. But from what I can see here, let me use this trend line. I think they always use trend lines to make a straight line also. Yeah, I think I got it this time around. Yup. And I can see something here, and then there's a reversal already. But for me, it's still bullish. Now the daily is bullish, okay? I've not really seen a significant break of structure here. I want to see that break of structure with impulsive moves. Then I can say then we're heading bearish. But let's check the 4-hour time frame. 4-hour time frame is ranging at this top, broke out of the range, came back to mitigate this. Yeah, came back to mitigate this, and we're heading to the downside. So on this 4-hour time frame, I'm very, very bearish. This is an imbalance break of structure here. Let me use trend line. I think I like using trend line for drawing straight line. It's not actually a trend line. Okay. I think I'm very bearish on this. That's my demand zone. And then on the 1-hour time frame, I can refine my order block to that. Okay, I like using the wick. And no mitigation. That's why I said you might not always get those mitigations. So I'm stopping on the daily time frame. Okay. So I'm still looking for sales on GBP and ZD. Here or here, whichever one. Now, some people say that this is an inducement. Whether there's an inducement or not, when market taps into this zone, I look for entries if there's inducement or not. And looking at these inducements here again, I love this imbalance here, which markets might feel. And target should be here. So that's how I do my top-down analysis, checking from the daily to the what, to the 4 to the 1 hour. Remember that the daily is very, very bullish. So any sell you are taking here, the structure on the 1 hour is bearish. The structure on the 4 hour is also very, very bearish. So I'm still cool with it. You know, on the daily, we might want to do some stuffs like this, get this, and you know, get a mitigation down here and continue bearish, because I can see we have sort of equal highs here already. Yeah, I think I should screenshot this and send it to the group for those that will need it. And me within around. Okay. Yeah, I think I've sent that to the group ASAP. That is how I run my multi-time frame analysis, top-down analysis. You can see I started from the daily, analyzing out to the 4 hours. Sometimes this might not be so smooth. Sometimes the 4 hour might be bullish, very, very bullish, and then bullish like this. And then on the 1 hour time frame, the 1 hour time frame might be bearish. Now, this bearishness of the 4 hour, just of the 1 hour, sorry, remember that the 4 hour is very, very bullish, and we want to go with the big time frame. So the 1 hour time frame that is bearish might just be what, a retracement, as we all know, and to continue pushing higher on the what, bigger time frames. So you should also understand that we want to follow the bigger time frame structure, and like that, same did this one because it's not realistic. Okay, so let's just use this. Now the 4 hour might be very, very bullish, but going to the 1 hour, it might be bearish. So at that point in time, you can just look for the structure. Now the structure on the 4 hour is higher low, higher high, higher low, higher high, yes, higher low, then higher high. Then you should know that market should come and give you what's a higher low. And when market has not given you the higher low, going down to the 1 hour, you are seeing what's a bearish structure. That doesn't mean you can't take short sales into what, into the higher low of the smaller time frame to get into the higher low of the 4 hour time frame to continue pushing price to the upside again. And same thing might happen on the 4 hour time, on the 1 hour time frame, and you continue the cycle just like that. That's what we call the fractal markets. You know, we are viewing markets in a very, very fractal way. Whatever is happening on the smaller time frame is happening on the bigger time frame also. So for the hidden order block, yes, hidden that block. It's not a necessary information. Like I just said, I don't want to go back too much. Okay, let me first draw it out. It's always something like this. When the candle is here, let me just draw out candles. We have two ways of identifying hidden other blocks. So this is one way, this is another way. Yeah, okay. Now this is a candle here. This is the wick. This is the wick. This is the wick. And this is the wick. Sorry. Yes. Don't mind my candles, we'll just focus. Yeah, just focus. Now, first of all, let me explain this one. This one is easy to identify. Candles with long wicks like this, either red or green. Let me quickly fill these. Yeah. Now, this is another block here on this candle. Yes, that wick is regarded to as what? An order block. What do we actually refer to as order block? Order block candle is the last down candle before the up move, or the last up candle before the down move. Now, taking a look at the wick of this candle here, this red candle, it was the last up candle, it was the last up movement before the down candle. You can see last up movement before the down candle. So we refer that to as a order block that is what? Hidden on the wick of the candle. Now, going into smaller time frames, you see something like this. That's the wick, and then the whole candle itself, like that. So this is where the structure comes in. So that zone is the order block zone, because when you get into the smaller time frame, you can see small candles that are forming or acting as order blocks. Now let's explain this one also. Let's use green candle for this. Which green did I even use now? Okay. Now this is the order block candle here. The wick, these 2 wicks here are hidden order blocks. Let me change the color back to white. Yes. It's still the same ideology, but this one is harder to see than this one. So you should be expecting a mitigation and straightforward, just like that. The way I identified that candle yesterday. So the idea is this is the last down up candle, still the same as the up candle before the last move, but we always add this wick because they this is the close of this wick. So we add this last push down before this push up again, and then this last push up before the breakout or before the little movement to break structure. So we add these 2 wicks like this as the order block zone. So still the same thing on the smaller time frame. When it gets to the smaller time frame, you see something like this. Move up a little bit and down. So inside this zone here, there is an order block candle, a real order block candle inside that zone. So that's the way it always looks like. There is nothing so special about order block candle. Nothing really. I'm sorry, nothing special about hidden order block candle. So let's look at this zone here. You can see all these wicks here. You can see them. You can spot those sides as what order block. So let's go down to 30 minutes to check if we'll see the order block candle there. You all know how other blocks candles look like. You can see we have this range, but let's still see we'll get a beautiful or perfect. Yeah, so this is the 3 minutes time frame here. You can see this order block candle standing alone. Standing alone, you can see it here. This doge. Yes. And some people always ask, if it has mitigated like this, does it mean it will still get mitigated up to this point? It's left to you. That's why you need a trading plan. You need to check whichever one will work for you. For me, I'll still wait for return to order block and then mitigation, because I feel there's still a lot of orders here. But for you, if it doesn't work for you, remove it from your trading plan, and whenever there's a mitigation like this, you delete the zone ASAP. Delete the zone ASAP. But for me, I'll still leave it, and you can see how we drew out this order block candle from the wicks hidden order block. So let me use the second explanation. Yeah, I think I have a lot of questions already. Okay. I think I'm taking too much time. So you can see here that it's still on the wick perfectly. Okay. Now let's try to take a look at the second type of mitigation, or sorry, the second type of order block. It's always something like this. Whenever there's a wick of the previous candle and then the second candle also wicks up. But I don't think this one wicked up. But let's quickly check. Something like that. But I believe you all get the concept from the drawing I made earlier. So let's go down to the 15 minutes, 5 minutes. Then what I drew is not actually correct, safe. I want to look for that correct one that will show us the real order block candle. But we can see here that there's another block candle here on 5 minutes time frame. That's the last green candle before the sell move, as you can all see. Yeah, yes. Okay. So my questions. Yes, this person must know me very well. Euro USD, AUD JPY, and USD JPY. Yeah, those are my favorite pairs. Thank you for answering. Who's this person? This person must know me very well. How do you consider BOS? Is it when markets close the last high wick or opening of the candle? Yes, people always ask this also. For me, BOS is break of structure. Let it break the whole candle and body and wick. Let it break everything like this. Let it break the candle and the wick. But most of the time when people draw, I always draw on the candle. Why? Because I know that this second candle has still broken structure. This one has broken the structure. This one has broken the structure already. So I always draw it. Let it break the whole candle and the wick. That's why it's called break of structure. Okay. Let it break the wick also. Because if you leave it on the wick, there might still be something like let's say liquidity grab, stuff like that. There might be liquidity grab might want to happen because of the wick. It might be a low, it might be a recent low that market wants to take out from before taking off. So you want to see a clear breakout from the whole body and then from the whole wick to consider a break of structure. How do you identify WYCKOFF in a chart? WYCKOFF is trading in ranges. WYCKOFF is trade range, and you need to see some ranges, some ARST. But I said I just simplified it for my students, for those that want to know it. But WYCKOFF, how do you identify WYCKOFF? It's not so hard. When you can see stuffs like consolidation in the markets that is creating liquidity, you know that WYCKOFF is happening already. So it's left to you to know when market wants to break free and sell. So the way to identify WYCKOFF is what? Identifying the range. That's all. Because literally there's WYCKOFF everywhere. There's WYCKOFF here. There's WYCKOFF here. From this big zone I have here, there's WYCKOFF here. Okay, let me just use this one so I won't jargon everything. There's WYCKOFF here. Any trade range is a WYCKOFF range to me. There's WYCKOFF there. There's a WYCKOFF here like this. And so on and so forth. Anywhere you see trade ranges, the WYCKOFF there. So I believe that will be all for now. Fair value gap. I don't use fair value gap at all, so I don't know how it is used. I really don't use all those extra information. All I focus on is my imbalance, liquidity, order block, and mitigation. Okay, fair value gap, inducement, blah blah blah. I really don't use all those one. Okay, you can even say fair gap, value gap is inducement. So everything is just English, English, English. Okay, I think that will be all for now. No, that will be all for this 3 days class. So if you want to take your trading journey to a next level, then you can chat me up for mentorship, where we have different exclusive contents like 5 entry criteria so you don't always miss entry, personal one-on-one mentoring, and so on and so forth. You all know what it's about. So I believe there's no questions for now. Thank you for your time today. We'll be meeting some days again. Okay?
Thank you so much.
You're
Yeah,
welcome.
I sir, is there going to be any like advanced class?
Yes.
How you've not announced that, sir? When is it? When is it starting and how is it going to be?
Yeah, I'll let you know in Telegram group already. I'll let you know in Telegram group. So
Okay.
the advanced class is where you is going to be a paid class, but the only advantage is more time with me, especially if you don't understand the strategy. We have more one-on-one content. You have more videos to watch, and we have more entry criteria to watch out for, and then in-depth knowledge in taking your trading to the
And
next
we'll be
level.
added to the mentorship group where we'll get signals.
Yes.
Okay.
Okay,
All right.
thank
Please,
you. But please,
sir, please
uh,
announce the fee and everything now.
All right, no
So I will
problem.
start payment.
All right. I think that will be all for
uh,
now.
please, affordability is the main thing. Oh. Though
Okay.
I know that most people don't have problem with a paid class, but affordability, that's just the main thing.
Yeah.
That's the cocoa. Yes, yes. I
Okay.
think you